It's time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on.
Thank you for having me today.
Well, on the U.S. China trade war, now we have the Chinese Vice Premier Liu He quoted by the media as saying that substantial progress has been made towards a phased deal. Of course, President Trump also saying the talks are going well. What did they say, and how have the markets responded?
Yes, as you said, markets are responding quite nicely. If you look at the U.S. market, it has rebounded after pre-decimal Friday, rising by about 0.8% for NASDAQ, 0.9% for NASDAQ, and 0.7% for S&Ps. Basically, the Chinese government is saying that they are in a good progress, and also U.S. President Donald Trump said that the efforts to end the U.S. trade war with China are going well. And everything seems to be in order. Basically, what Trump is saying is the Chinese government wants to have this deal because the supply chain is going down the tubes. That's exactly what he said. So clearly, he's saying that he's in the right situations to get this deal done. Also, the U.S. Trade Representative Robert Lighthizer told reporters that basically they're trying to aim it to finalize the deal on the first phase of the deal by the time of the Asia Pacific Economic Cooperation meetings in Chile, which is expected on November 16th and 17th. So within next about less than a month or so, they're planning to go ahead and have that deal done.
Yeah, and on the issue of Brexit there on the other side of the world, Prime Minister Boris Johnson so far unable to get his deal through Parliament, but chances have increased that they'll avoid a no-deal scenario. They're crashing out on the 31st of October. That's looking less likely. So how are investors dealing with this scenario?
Well, it seems that they're dealing with this quite reasonably okay. As you said, Boris Johnson is trying to urge the MPs to back his Brexit deals as he launches a final bid to get the UK to leave the EU by end of the month. Basically, he has that withdrawal agreement bill, which was published on Monday. But still, there's doubts about whether this can be actually passed. There could be a quite considerable level of the 3 days timetable is needed, and we're not sure exactly whether that can be passed. And I heard that the UK have asked the EU that it gives them 3 month leeways for additional 3 months for the deals to get done. Now, the key concern is that if the no-deal Brexit actually happens, that is quite negative news for the UK economy, and the property market as well as the financial sector will take some hit, which will cause some uncertainties within the European market. As you already know, the European economy is quite weak in terms of the growth rate as itself. And if the UK problems add to it, then we could have actually a zero growth rate going forward, which will be quite a bit of a concern in regards to the possible recession going into the future.
Well, meanwhile, today we see the Korean currency trading at around 11.70 against the dollar, the strongest it's been in a few months. What's driving that? Perhaps connected to the talk about a U.S. China trade deal we mentioned, or where do you see it going from here?
Right. I mean, if you look at the U.S. Basically the stance in regards to the currency, they like to see the U.S. dollar to weaken a bit. And we are seeing that some happening. It reached almost the $100 index. Now it's down to about 97 level, which is about 3% depreciation, which is exactly what's happening to the Korean currency, won. It hit a peak of 12.23, now at 11.70, so it appreciated about a 4% or so. I mean, we are looking at the Chinese renminbi also. It hit the 7.2 yuan to dollar. Now it's down to about 7.05. So the appreciation of the currency for both renminbi as well as Korean won is actually happening. It's just the extent of the renminbi, the won appreciation is actually a little bit stronger than most of the other emerging markets. We are seeing in general that's happening because the Korean government is trying to, boost the economy by lowering interest rate as well as trying to come up with the budget. So all that means that Korea can achieve 2% growth rate, which is similar to the U.S. growth rate. So therefore, we think that the currency rate should be able to stabilize at current rate.
Well, we'll keep a close eye on that for sure. All right, Mr. Yu, that's where we'll have to leave it today. Thanks for sharing your insights.
Thank you very much.